Have you ever felt like you're planting seeds, but never seeing them grow? Like you're putting in countless hours, doing everything right, yet there's no visible payoff? If you've ever struggled with this silent frustration, you're not alone. Research reveals a sobering truth. 73% of entrepreneurs abandon their biggest initiatives within 90 days, mistaking temporary silence for permanent failure. But what if success is actually taking root, quietly building strength beneath the surface, like bamboo, whose roots grow silently for years before suddenly soaring skyward? This hidden growth, what I call the bamboo effect, is the secret behind some of the world's greatest breakthroughs. It's why James Dyson persevered through 5,126 failed prototypes before revolutionizing the vacuum cleaner industry. Why J.K. Rowling endured 12 rejections before Harry Potter became a global phenomenon, and why SpaceX could survive 3 launch failures before finally reaching orbit. In the bamboo effect, you'll discover why invisible growth is not only normal, but essential to lasting success. You'll learn how to recognize and navigate the silent gap between effort and results, develop patience as a strategic asset, and build resilient systems that compound quietly until they reach a critical mass that ignites explosive growth. Whether you're an entrepreneur, creative, or anyone seeking to achieve breakthrough results, this book will transform how you view success and failure, patience and persistence, effort and reward. It's time to stop pulling up seeds prematurely. It's time to master the bamboo effect. Welcome to the hidden side of success. Let's begin. Chapter 1: Hidden Roots. Your business mentor pulls up a chair and drops a truth bomb. You've been working your ass off for 6 months. Where are the results? The question hits like a sledgehammer. You've shipped content daily. You've networked relentlessly. You've optimized everything twice. Yet your revenue flatlined. Your audience growth stalled. Your confidence cracked. Here's what your mentor doesn't tell you, and what 90% of ambitious solopreneurs never discover. You're not failing. You're building roots. This chapter will shatter the most dangerous lie in business, that effort should equal immediate results. You'll learn why the silent gap between input and output isn't your enemy, it's your secret weapon. By the end, you'll understand the bamboo effect and why patience isn't just a virtue, it's a competitive advantage that compounds into inevitable success. The silent killer, when your brain lies to you. Your brain evolved for survival, not success. When a saber-toothed tiger charged, immediate feedback meant life or death. But in business, this same wiring becomes your worst enemy. Present bias hijacks your judgment. Your mind overweights what happened today and underweights what's building beneath the surface. You ship a piece of content and check metrics within hours. No spike, your brain screams failure. You launch a product and obsess over day one sales. Crickets? Time to pivot. This creates attribution error, the deadly assumption that if outputs don't appear, inputs don't work. You abandon strategies right before they would have paid off. You restart cycles that were about to compound. Each reset erases months of invisible progress and compounds the cost of starting over. The math is brutal. 73% of solopreneurs quit their first major initiative within 90 days. They don't fail because their strategy was wrong. They fail because they mistake silence for failure. The lagging indicator trap. Most entrepreneurs build dashboards that torture them. Revenue charts, follower counts, conversion rates, pure lagging indicators, outcomes you can't directly control that arrive on delay. These metrics create emotional whiplash. Green Monday, red Tuesday. You're a genius at breakfast, an idiot by lunch. Your mood swings with numbers that reflect decisions you made weeks ago, not the work you're doing today. Vanity metrics make it worse. You chase likes instead of building systems. You optimize for applause instead of assets. Social comparison amplifies the pain. Everyone else seems to be crushing it while you're grinding in silence. The cruel irony? The more you focus on lagging indicators, the worse they get. Desperation repels customers. Anxiety kills creativity. Panic pivots destroy momentum. The intensity illusion. Here's another lie. Working harder guarantees faster results. So you sprint. 18-hour days, weekend warriors, hustle porn heroes. But sporadic intensity without systems is just expensive motion. You burn energy on low-leverage tasks. You skip the boring fundamentals that compound. You mistake being busy for being productive. Without a persistence budget, defined limits on time, cash, and emotional energy, you flame out before the lag ends. Without root assets building in the background, you have nothing to show for the grind. What happens when you get this right? Master the bamboo effect and everything changes. You build compounding assets, frameworks, SOPs, content libraries that work while you sleep. Trust flywheels reduce selling friction. Your reputation becomes your moat. You hit the critical mass threshold where accumulated micro-wins ignite rapid acceleration. The latency dividend unlocks disproportionate returns that make the grind look inevitable in hindsight. Effort amnesia sets in. The pain fades, but the rewards persist. Emotional stability follows. Fewer panic pivots. Strategic calm becomes your signature. Your identity shifts from always starting to I outlast and I win. James Dyson built 5,126 prototypes before his first successful vacuum. 5,000 failures. Most would have quit at prototype 50. Dyson understood what you're about to learn. Mechanism first, results second. Those failed prototypes weren't failures. They were roots. When the breakthrough came, it wasn't luck. It was inevitable. The cost of impatience. Ignore the bamboo effect, and you enter chronic restart cycles. Each reset erases roots and compounds cost. You lose momentum, morale, and market signal. Competitors with patience pass you permanently. Your skills stagnate, no depth, only breadth. You become a jack of all starts, master of none. Burnout follows. Effort without evidence breaks spirits. Decision fatigue from constant strategy hopping paralyzes progress. Your reputation suffers. Missed deadlines erode trust. Lower leverage work becomes your ceiling. Always starting becomes your brand. Your bamboo blueprint. This book will install 5 systems that transform how you work. Lag literacy teaches you to read time correctly. You'll map your arena's root-to-shoot lag ratio and separate leading from lagging indicators. No more yanking seeds to check growth. Root work shows you how to build quiet assets while ignoring applause. Daily, boring consistency beats sporadic brilliance. You'll enforce feedback fasting windows that protect your mood during silent phases. Measure Right creates a one-page dashboard with no vanity metrics. Decision journals with look-back windows reconnect cause and effect across time. You'll red team one assumption per decision. Breakthrough Thresholds helps you define exit velocity and engineer the moment where enough becomes inevitable. You'll pre-build surge SOPs and run plateau puncture experiments. Momentum Mastery ensures you channel acceleration without breaking what got you there. Guardrails protect quality. Reinvestment compounds returns. You'll keep rituals intact after the surge. Winners versus losers, the great divide. Winners are patient, process-driven, boringly consistent. They measure inputs, respect lags, and outlast everyone. They play long games, build assets, and ignore noise. Losers are impatient, outcome-chasing, novelty-addicted. They confuse motion with progress. They quit at the trough of disbelief, right before the breakthrough. J.K. Rowling faced 12 rejections before Harry Potter found a publisher. 12 no's that would have stopped most writers, but Rowling understood the lag. Each rejection was data, not doom. Each rewrite strengthened the roots. When Bloomsbury finally said yes, the foundation was unshakable. 7 books, 8 movies, a billion-dollar franchise. The latency dividend in action. The bamboo moment. In nature, bamboo spends years building an intricate root system underground. To observers, nothing happens. The surface stays bare. Doubt creeps in. Is it even alive? Then, in a single growing season, bamboo shoots skyward, 90 feet in 90 days, the fastest growing plant on Earth. Observers call it overnight success. They're wrong. It took years of invisible preparation. Your business follows the same pattern. The silent gap isn't empty. It's full of roots spreading, strengthening, preparing for the surge. Every email you send, every piece of content you create, every system you build feeds the underground network. SpaceX failed 3 times before reaching orbit. 3 explosions, millions lost. Critics called Elon Musk delusional, but each failure taught lessons that strengthened the foundation. When Falcon 1 finally succeeded, contracts poured in, capital followed. The compounding innovation flywheel began spinning. The fourth launch wasn't lucky, it was inevitable. Your breakthrough follows the same logic. Every day you persist while others quit, you're building inevitability. The bamboo effect isn't about waiting passively, it's about working strategically while others work frantically. The next chapter reveals how to design this invisible work. You'll learn to build root work that compounds in silence, creating the foundation for everything that follows. But first, you must embrace a truth that separates winners from everyone else. The gap between effort and results isn't a bug, it's a feature. Before we continue, make sure to subscribe to Grow to the Top and activate notifications to receive more self-improvement tips that will supercharge your growth. And make sure to give this video a thumbs up and share it with your friends. It really helps the channel grow. Thank you for your support. Chapter 2, Root Work. The most successful entrepreneur you know just shared their secret. I work 4 hours a day, they say with a straight face. Everything else runs itself. You stare in disbelief. 4 hours? You're grinding 16-hour days and barely keeping up. They must be lying or lucky, or both. Here's what they're not telling you. Those 4 hours aren't random. They're root work, invisible labor that compounds into visible freedom. While you're chasing outcomes, they're building the underground infrastructure that makes outcomes inevitable. This chapter reveals how to design your own root work system. You'll learn why the most important work happens in private, why boring beats brilliant, and how to build assets that work while you sleep. But first, we need to destroy 3 myths that keep ambitious people trapped in the hustle cycle. The shallow foundation trap. Picture a skyscraper built on sand. Impressive from the outside, catastrophic under pressure. That's most businesses today. All flash, no foundation. Rootless growth is luck, not strategy. When demand spikes, shallow systems collapse. Your customer service buckles, your delivery delays, your quality plummets. What looked like success becomes a reputation disaster overnight. The math is unforgiving. 67% of fast-growing companies fail within 2 years because they scaled chaos instead of systems. They prioritized visibility over viability. They built chutes without roots. James Dyson understood this differently. Before his first vacuum hit shelves, he spent 15 years perfecting the mechanism. 5,000 prototypes, countless iterations, 0 revenue. His friends called him obsessed. His bank account called him broke. But Dyson was building something his competitors couldn't see, deep technical mastery that would become unassailable. When the DC-01 finally launched, it didn't just succeed. It redefined an entire category. Dyson's overnight success took 15 years of invisible preparation. The lesson cuts deep. Depth creates defensibility. Defensibility creates pricing power, and pricing power creates freedom. Skip the roots, and you'll forever compete on price in a race to the bottom. The myth of public accountability. Social media gurus preach transparency. Share your journey, they shout. Build in public. The advice sounds wise until you try it. Early exposure invites noise and derailment. Every post becomes a referendum on your progress. Every comment becomes a distraction. Every metric becomes a mood swing. You start optimizing for applause instead of assets. Serena Williams learned this lesson early. While other young players chased rankings and media attention, Williams spent years drilling fundamentals in private. Boring repetition, technical refinement, mental conditioning. No cameras, no crowds, no commentary. The tennis world barely noticed her until she exploded onto the scene at 17, winning the US Open. Suddenly, everyone wanted to know her secret. There was no secret, just years of invisible work that created visible dominance. The pattern repeats across industries. The most successful creators, entrepreneurs, and leaders share a common trait. They build in the dark and launch in the light. They protect fragile early work from external judgment. They ship privately before they ship publicly. The intensity illusion revisited. More hours don't equal more results. More focused hours do. But focus isn't about grinding longer. It's about designing systems that make focus automatic. Your brain has roughly 4 hours of peak cognitive capacity per day. Waste those hours on shallow work, and you'll spend the rest of your day fighting friction. Protect those hours for root work, and everything else becomes easier. This is why successful people seem to work less while achieving more. They've learned to front-load their energy on high-leverage activities. They've built systems that handle routine decisions. They've created assets that compound while they rest. The architecture of inevitability. Root work isn't random activity, it's strategic asset creation. You're building 3 types of compounding infrastructure that will define your future capacity. Knowledge assets are your signature frameworks, methodologies, and intellectual property. These become your competitive moat. When clients hire you, they're not just buying your time, they're buying your unique approach to solving their problems. System assets are your SOPs, automations, and operational infrastructure. These multiply your throughput without multiplying your effort. A well-designed system can handle 10 times the volume with the same stress level. Distribution assets are your evergreen content, email lists, and owned channels. These create compound audience growth that reduces your dependence on external platforms. Every piece of valuable content becomes a magnet that attracts opportunities for years. The magic happens when these assets stack. Your framework becomes content. Your content builds your list. Your list generates demand for your systems. Your systems deliver results that validate your framework. The flywheel spins faster with each rotation. The sacred hour. Root work requires protection from the chaos of daily operations. This means creating a non-negotiable time block, your root block, that nothing can touch. 60 to 90 minutes. Same time every day, same location, same ritual. This isn't flexible time that moves when meetings appear. This is sacred time that everything else works around. The trigger action reward loop makes it automatic. Your trigger might be your first cup of coffee. Your action is opening your root work document. Your reward is checking off another day of consistency. Simple, but powerful. The shutdown routine is equally important. End each session by cueing tomorrow's starting point. Write the first sentence of your next section. Outline the next SOP step. Set up the next experiment. This eliminates the friction of starting fresh each day. The privacy principle. Here's where most people go wrong. They share too early and too often. They post about their new framework before it's tested. They announce their system before it's proven. They seek feedback before they have signal. Effort visibility hygiene protects your work from premature judgment. Share only with a tight inner circle of trusted advisors. Avoid feedback requests until you have repeatable signals. Ship privately to test audiences before going public. This isn't about secrecy, it's about signal clarity. Early feedback is mostly noise. People judge incomplete work by complete standards. They suggest changes based on their preferences, not your market's needs. They mean well, but they derail progress. Build in private until your work speaks for itself. Then let the results do the talking. The minimum viable repetition. Perfectionism kills root work. You'll never ship if you wait for perfect. Instead, define your minimum viable repetition, the smallest daily unit that maintains momentum. 30 lines of code, 1 page of writing, 1 framework component. The goal isn't perfection, it's consistency. Small daily progress compounds into massive yearly gains. Track your streaks, but never miss twice. 1 missed day is a mistake. 2 missed days is a pattern. 3 missed days is a broken system that needs redesigning. The 2-minute starter breaks initial friction. Begin each session with something easy, editing yesterday's work, reviewing your outline, or organizing your notes. Momentum builds momentum. Start moving, and the hard work becomes easier. The compound curve in action. Root work follows a predictable pattern. The first 30 days feel like pushing a boulder uphill. You're building habits, fighting resistance, and seeing minimal output. This is normal. This is necessary. This is where most people quit. Days 30 to 60 show the first signs of compound interest. Your systems start clicking, your frameworks take shape, your confidence builds. The work feels less forced and more natural. Days 60 to 90 reveal the magic. Assets start connecting, opportunities start appearing, inbound interest starts growing. What felt impossible at day 10 feels inevitable at day 90. The best outcome isn't just completed assets, it's transformed capacity. You've built the infrastructure to handle 10 times your current volume. You've created systems that work without your constant attention. You've developed the confidence that comes from consistent execution. When root work goes wrong, overexposure early kills momentum. If you've shared too much too soon, go dark for 30 days. Rebuild in private. Let your work mature before seeking external validation. Scope creep destroys focus. If your projects keep expanding, enforce a one-sentence specification for each session. Know exactly what you're building before you start building it. Motivation dips are inevitable. When they hit, shorten your blocks but maintain the schedule. Pair your work with stronger triggers. Use countdown timers to create urgency. The goal is consistency, not intensity. Perfectionism paralyzes progress. Set strict time limits for each asset. Ship at usable, not perfect. You can always iterate later, but you can't improve what doesn't exist. Overplanning wastes energy. Limit planning to 20 minutes per week. Spend your energy doing, not designing. Perfect plans executed poorly beat imperfect plans executed consistently. The underground advantage. Root work is your secret weapon because it's invisible to competitors. They see your results, not your process. They copy your outputs, not your systems. They chase your current position while you're building your next advantage. This creates a permanent edge. While they're reacting to what you've already done, you're creating what you'll do next. While they're optimizing for today's game, you're building tomorrow's rules. The compound effect accelerates over time. Your first root work cycle might produce one valuable asset. Your second cycle produces 3. Your third cycle produces 10. The infrastructure you build today becomes the foundation for exponentially greater output tomorrow. But root work is just the beginning. Building assets in isolation isn't enough. You need to understand when those assets will start paying dividends. The next chapter reveals the hidden timing patterns that separate patient builders from premature quitters. You'll learn to read the signals that most people miss and discover why the longest gaps often precede the biggest breakthroughs. Chapter 3, Lag Literacy. A brilliant entrepreneur just torched 18 months of progress. Her content strategy was gaining momentum. Her audience was growing. Her systems were clicking. Then she checked her revenue dashboard on a Tuesday morning and panicked. "Nothing's working," she announced to her team. "We're pivoting to paid ads." 3 months later, her organic reach collapsed. Her audience trust evaporated. Her cash burned through paid campaigns that never converted. She traded inevitable success for immediate gratification and lost everything. Her fatal flaw? She couldn't read time. This chapter teaches you lag literacy, the ability to decode when your efforts will surface as results. You'll learn why different inputs operate on different clocks, how to separate signal from noise, and why the most dangerous moment in any venture is right before the breakthrough. Master this, and you'll outlast 90% of your competition simply by staying in the game when others quit. The time illusion that kills dreams. Your brain lies about time. It expects linear cause and effect. Do something today, see results today. But business operates on lag ratios that would make your ancestors weep. Content marketing takes 90 days to show organic traction. SEO takes 6 months to move rankings. Relationship building takes years to generate referrals. Network effects take decades to compound into category dominance. Yet most entrepreneurs check their metrics daily. They pivot weekly. They abandon strategies monthly. They're yanking seeds to see if they're growing, killing the very roots that would have fed their success. The math is brutal. 78% of profitable strategies get abandoned in their first 120 days, not because they don't work, but because their creators can't read the lag. They mistake silence for failure. They confuse delay for dysfunction. They trade inevitability for novelty. Jeff Bezos understood this differently. Amazon operated at razor-thin margins for years while competitors mocked their lack of profitability. Bezos wasn't optimizing for quarterly earnings. He was building flywheels that would compound for decades. Customer obsession led to better selection. Better selection led to more customers. More customers led to better economics. Better economics led to lower prices. Lower prices led to more customers. The flywheel spun faster with each rotation, but it took years to build momentum. Wall Street called him crazy. Competitors called him unsustainable. Bezos called it lag tolerance, and it made him the richest person on earth. The clock tower of business. Different activities operate on different time horizons, like a clock tower with multiple faces showing different zones. Master this, and you'll never again mistake a slow clock for a broken one. Skill acquisition runs on the 30-day clock. You can learn new software, master new frameworks, or develop new capabilities within a month of focused effort. This is your fastest feedback loop. Use it to build confidence during longer cycles. Asset creation runs on the 90-day clock. Building frameworks, creating content libraries, or developing systems takes a full quarter of sustained effort. The first month feels like pushing a boulder. The second month shows momentum. The third month delivers compound returns. Distribution response runs on the 6-month clock. Organic reach, SEO rankings, and audience growth require sustained consistency across multiple quarters. Early metrics are pure noise. Real signal emerges after 180 days of disciplined execution. Reputation building runs on the annual clock. Trust, referrals, and market positioning compound over years, not months. This is your longest cycle and your most valuable asset. The trap is checking annual clocks daily. You're measuring reputation shifts on Tuesday and wondering why nothing moved. You're expecting distribution breakthroughs in week 3 and panicking when they don't appear. The signal versus noise battlefield. Most metrics lie. They reflect random fluctuations, seasonal patterns, or external factors you can't control. Lag literacy means separating signal from noise, focusing on inputs you control while treating outputs as delayed echoes. Leading indicators are your controllables. Content pieces published, outreach messages sent, product demos delivered, framework iterations completed. These metrics respond to your effort immediately and predict future outcomes reliably. Lagging indicators are your outcomes. Revenue generated, rankings achieved, referrals received, media mentions earned. These metrics arrive on delay and fluctuate based on factors beyond your immediate control. The amateur obsesses over lags. The professional optimizes for leads. The master uses leads to predict lags, then waits patiently for reality to catch up. Consider 2 entrepreneurs launching similar businesses. Entrepreneur A checks revenue daily, adjusts strategy weekly, and pivots monthly based on outcome fluctuations. Entrepreneur B tracks content output daily, reviews engagement weekly, and adjusts strategy monthly based on leading indicators. After 1 year, Entrepreneur A has tried 12 different approaches and built nothing sustainable. Entrepreneur B has built one approach consistently and achieved breakthrough traction. Same market, same opportunity, different literacy. The anxiety buffer system. Lag literacy isn't just about understanding time. It's about designing systems that protect your psychology during silent periods. Without these buffers, even the most patient person will crack under uncertainty. The weekly input review keeps you anchored to controllables. Every Monday, you assess your leading indicators. Did you hit your content targets? Complete your outreach goals? Ship your planned assets? This review builds confidence through consistency, regardless of outcome fluctuations. The monthly lag assessment provides signal without noise. Once per month, you examine your lagging indicators for trends, not daily movements. You're looking for directional shifts over 30-day windows, not Tuesday to Wednesday variations. The quarterly strategy synthesis connects inputs to outcomes across meaningful time horizons. Every 90 days, you map your leading indicators to your lagging results, identify what's working, and adjust your approach based on real data. not emotional reactions. The no midweek outcome checks rule protects you from noise addiction. You don't check revenue on Wednesday. You don't obsess over rankings on Friday. You don't panic over engagement on Sunday. Outcomes get one scheduled review per month, period. This cadence transforms your relationship with uncertainty. Instead of fearing the lag, you expect it. Instead of fighting the delay, you use it. Instead of checking compulsively, you trust systematically. The metric stack that matters. Lag literacy requires ruthless metric discipline. Most entrepreneurs track everything and optimize nothing. You'll track 5 metrics and optimize everything. 3 leading indicators capture your highest leverage inputs. These might be content pieces shipped, outreach conversations initiated, or product demos delivered. Choose metrics you control completely and that causally drive your desired outcomes. 2 lagging indicators capture your critical outcomes. These might be monthly recurring revenue and customer acquisition cost, or organic traffic and conversion rate. Choose metrics that matter for your business model and ignore everything else. Define success bands for each metric. Leading indicators get tight bands. You should hit these targets 80% of weeks. Lagging indicators get wide bands. You're looking for trends, not precision. Rename your metrics as verbs, not nouns. Ship 3 frameworks instead of frameworks. Complete 10 demos instead of demos. This subtle shift reinforces your control over inputs while acknowledging the delay in outputs. Use rolling 30-day averages for lagging indicators. Daily fluctuations are noise. Weekly patterns are often seasonal. Monthly trends reveal signal. This smoothing prevents you from overreacting to random variations. The calibration process. Your lag map starts as educated guesses and evolves into predictive intelligence. The goal isn't perfect accuracy. It's directional confidence that prevents premature abandonment. For each input, estimate your expected output window. Content marketing might show engagement in 30 days, traffic in 90 days, and conversions in 180 days. Outreach might generate responses in 7 days, meetings in 14 days, and deals in 90 days. Note your earliest, median, and latest response times. Your first piece of content might get shared immediately, but most will take weeks to gain traction. Your first outreach might convert instantly, but most will require multiple touchpoints over months. Adjust your windows with real data. If your content consistently takes 120 days to show traffic impact instead of 90, update your expectations. If your outreach converts faster than predicted, accelerate your follow-up cadence. This calibration process builds lag intuition, the ability to sense when results should appear and when delays signal real problems versus normal variance. The patience paradox. Here's the counterintuitive truth. The longer your lag, the more valuable your advantage. Activities with immediate feedback attract everyone. Activities with delayed feedback attract only the patient, and patience is rare. Social media marketing shows instant engagement, so everyone does it. Content marketing takes months to compound, so few persist. Paid advertising delivers immediate traffic, so competition is fierce. SEO takes quarters to show results, so most quit early. The patient few who master long lag activities inherit massive advantages: less competition, higher barriers to entry, more defensible positioning, compound returns that accelerate over time. This is why lag literacy creates edge. You're not just learning to wait, you're learning to work where others won't. You're building advantages that can't be copied quickly. You're playing games that reward endurance over intensity. When lag literacy breaks down, metric overload destroys clarity. If you're tracking more than 5 metrics, you're tracking nothing effectively. Cut ruthlessly. Kill vanity metrics. Focus on the vital few that causally drive your outcomes. Wrong indicators create false confidence. If your leading indicators don't actually predict your lagging outcomes, you're optimizing for the wrong inputs. Test your assumptions. Validate your causal chains. Replace metrics that don't correlate with results. Gaming your leads corrupts the system. If you're hitting your content targets by publishing low-quality pieces, you're fooling yourself. Add quality gates. Define minimum standards. Track useful outputs, not just any outputs. Anchoring on outliers warps your expectations. If your best piece of content went viral immediately, don't expect every piece to follow the same pattern. Use medians and ranges, not exceptional cases, to calibrate your lag map. The most dangerous trap is yanking seeds, checking outcomes too frequently, and abandoning strategies too quickly. This is where feedback fasting becomes essential, creating forced patience that protects your long-term strategy from short-term noise. The compound advantage. Lag literacy compounds over time. Your first cycle teaches you the basics, which metrics matter, and roughly when to expect results. Your second cycle refines your timing. You can predict outcomes with increasing accuracy. Your third cycle creates intuition. You sense when something's working before the data confirms it. This intuition becomes your secret weapon. While competitors panic during normal lag periods, you stay calm. While they abandon strategies prematurely, you persist through the silent phase. While they chase immediate feedback, you build long-term advantages. The ultimate outcome isn't just better timing, it's strategic calm. You operate with quiet confidence because you understand the rhythm of results. You make decisions based on patterns, not panic. You build businesses that compound because you respect the time it takes for compounding to work. But understanding lag is only half the battle. The other half is recognizing when accumulated efforts cross the threshold into exponential returns. The next chapter reveals the hidden mathematics of breakthrough moments and how to engineer them before your competitors even know they're possible. Chapter 4, Compound Curve. The entrepreneur stared at her growth chart in disbelief. For 8 months, the line had crawled along the bottom, flat, stubborn, mocking. Then, in week 36, something shifted. The line bent upward. Week 37, it steepened. Week 38, it went vertical. What changed? Her advisor asked, studying the dramatic inflection. Nothing, she replied, confused. I did the same thing I'd been doing for months. Her advisor smiled. That's exactly why it worked. She had stumbled onto one of business's most powerful yet misunderstood phenomena, the compound curve. What looked like sudden success was actually the inevitable result of accumulated effort crossing an invisible threshold. The flat months weren't wasted time. They were capacity building. The surge wasn't luck. It was mathematics. This chapter reveals how to read these curves, predict these inflections, and position yourself to catch the wave when it breaks. You'll learn why plateaus are data, not doom, and how to engineer breakthrough moments that look magical to everyone else. The geometry of growth. Progress doesn't follow a straight line. It follows an S-curve, slow build, rapid acceleration, eventual plateau. This pattern repeats across every domain: skill acquisition, audience growth, revenue scaling, market penetration. The build phase feels like pushing a boulder uphill. You're creating capacity, learning systems, establishing routines. Effort is high, results are minimal, doubt is constant. This is where 80% of people quit. They mistake capacity formation for failure. The surge phase feels like riding a rocket. Small inputs create massive outputs. Opportunities multiply. Momentum builds on momentum. This is where 15% of people break their systems. They scale chaos instead of capability. The stabilize phase feels like cruising at altitude. Growth continues, but at a sustainable pace. Quality matters more than quantity. Efficiency replaces intensity. This is where 5% of people build lasting advantage. Most entrepreneurs misread these phases. They panic during build, overextend during surge, and stagnate during stabilize. They break when they should accelerate and accelerate when they should consolidate. Netflix mastered this pattern across multiple curves. Their DVD by mail service followed the classic S-curve: slow adoption, rapid growth, market saturation. But instead of riding that single curve to obsolescence, they launched their next curve, streaming, while the first was still climbing. Each curve compounded into the next. DVD operations funded streaming infrastructure. Streaming data informed content decisions. Content differentiation enabled global expansion. Original programming created cultural dominance. What looked like a series of lucky pivots was actually methodical curve stacking. The hidden mathematics of momentum. Here's what most people miss. Compound curves aren't smooth, they're lumpy. Progress accumulates in invisible increments, then releases in visible bursts. This creates the illusion of overnight success when the reality is underground preparation. Internode compounding explains why breakthroughs appear sudden. You're not building one curve, you're building multiple curves simultaneously. Your content curve, your network curve, your skill curve, your reputation curve. Each develops at different speeds, but they're all connected. When multiple curves align, their combined effect creates exponential acceleration. Your improved content attracts better connections. Better connections create more opportunities. More opportunities develop new skills. New skills improve your content. The feedback loops amplify each other. This is why successful people seem to get lucky repeatedly. They're not lucky. They're positioned at the intersection of multiple compounding curves. When one curve surges, it pulls the others along. The key insight: you can't predict exactly when the surge will happen, but you can predict that it will happen if you maintain consistent inputs across multiple curves. The timing is uncertain, but the outcome is inevitable. The attribution trap. When breakthrough moments arrive, your brain plays tricks on you. It credits the surge to whatever you did most recently, not what you did most consistently. This creates dangerous misattribution that can destroy your next curve. Time-shifted attribution corrects this bias. Today's breakthrough connects to yesterday's repetitions, not this morning's inspiration. The viral post that launched your business was enabled by months of audience building. The client that transformed your revenue was attracted by years of expertise development. Without proper attribution, you'll optimize for the wrong variables. You'll chase the tactics that were visible during the surge while abandoning the systems that created the surge. You'll mistake correlation for causation and break what's actually working. Decision journal linkage solves this problem. You log your assumptions when you make them, not when you see results. You set review dates based on expected lag windows. You assign credit based on documented timelines, not emotional recollections. This creates a feedback loop that improves over time. Your first curve teaches you the basics of your domain. Your second curve refines your timing. Your third curve develops intuition. By your fourth curve, you can sense inflections before they appear in the data. The plateau paradox. Plateaus aren't problems, they're preparation. The flat sections of your curve aren't wasted time. They're capacity formation periods where invisible infrastructure develops that will support visible growth. During plateaus, your systems are hardening. Your skills are deepening. Your network is expanding. Your reputation is building. None of this shows up in your metrics immediately, but all of it enables your next surge. The impatient quit during plateaus. They see flat metrics and assume their strategy is broken. They pivot to new tactics, abandoning systems right before they would have paid off. They trade inevitable success for immediate gratification. The prepared use plateaus strategically. They run controlled experiments to puncture the plateau. They strengthen their foundation to support the next surge. They prepare their systems to handle increased demand. Plateau puncture experiments are small, time-boxed tests that probe for breakthrough opportunities. You change one variable at a time, measure with leading indicators, and wait for lag windows to reveal results. Most experiments fail, but the few that succeed can shift your entire trajectory. The key is keeping 80% of your energy on base repetitions while allocating 20% to experiments. This protects your foundation while creating upside optionality. You're not gambling with your core systems, you're testing enhancements to them. The three-zone strategy. Each curve zone requires different tactics, different metrics, and different mindsets. Mismatching your approach to your zone kills momentum and wastes energy. Build zone strategy focuses on consistency over intensity. You're establishing routines, developing capabilities, and creating assets. Your primary metrics are leading indicators, inputs you control completely. Your mindset is patient persistence. Your biggest risk is quitting too early. During build, you protect your time blocks religiously. You ship consistently regardless of immediate feedback. You invest in systems that will scale later. You resist the temptation to check outcomes daily. You trust the process even when progress feels invisible. Surge Zone strategy focuses on channeling momentum without breaking systems. You're scaling what's working while maintaining quality. Your primary metrics shift to throughput and efficiency. Your mindset is controlled aggression. Your biggest risk is scaling chaos. During Surge, you double down on proven channels while pruning distractions. You add capacity before you need it. You maintain quality standards despite increased volume. You resist the temptation to chase every opportunity. You scale the vital few, not everything. Stabilized Zone strategy focuses on optimization and preparation for the next curve. You're improving efficiency, paying down technical debt, and building the foundation for your next S-curve. Your metrics balance maintenance and innovation. Your mindset is strategic patience. Your biggest risk is complacency. During Stabilize, you systematize what you've learned. You document your processes. You train your team. You identify the next curve to build. You resist the temptation to coast on current success. You prepare for the next build phase while optimizing current operations. The memory problem. Success creates amnesia. When your curve surges, you forget the grinding months that made it possible. You start believing your own overnight success story. You abandon the boring fundamentals that created your breakthrough. This is why most people can't repeat their successes. They misremember what actually worked. They credit the visible tactics while forgetting the invisible systems. They try to skip the build phase of their next curve because they've forgotten how essential it was for their first. Decision journals serve as your memory prosthetic. They capture your thinking in real time before results bias your recollection. They document the timeline between inputs and outputs. They preserve the lessons that success tends to erase. Look-back windows create structured reflection. Every 30 days, you review recent decisions against emerging results. Every 90 days, you analyze patterns across multiple cycles. Every 180 days, you synthesize learnings into updated strategies. This process builds compound wisdom. Each curve teaches you something new about your domain, your market, and your capabilities. The lessons stack, creating better judgment and faster pattern recognition. Your fourth curve launches faster than your first because you've learned to read the signals. The internode advantage. The most successful people don't build single curves, they build curve portfolios. While one curve is in build mode, another is surging, and a third is stabilizing. This creates consistent growth despite individual curve volatility. Curve stacking requires careful resource allocation. You can't build 3 curves simultaneously at full intensity. You need to sequence your investments, timing new curve launches to coincide with existing curve stabilization. The magic happens when curves start reinforcing each other. Your content curve builds your audience. Your audience curve generates your revenue. Your revenue curve funds your team. Your team curve accelerates your content. Each curve amplifies the others. This creates anti-fragile growth, systems that get stronger under stress. When one curve hits a plateau, others continue growing. When external shocks disrupt one curve, you have alternatives. When opportunities arise, you have multiple ways to capture them. The compound advantage. Mastering compound curves creates permanent competitive advantage. While others chase linear growth, you're building exponential systems. While they optimize for quarterly results, you're positioning for decade dominance. While they react to market changes, you're creating market changes. The compound advantage accelerates over time. Your first curve teaches you the fundamentals. Your second curve develops your intuition. Your third curve creates your methodology. Your fourth curve establishes your reputation. Your fifth curve defines your category. Eventually, you're not just riding curves, you're creating them. Your actions influence market dynamics. Your decisions shape industry standards. Your success creates opportunities for others to follow. You've moved from player to platform. But compound curves are just the foundation. The real breakthrough happens when accumulated effort crosses a critical threshold, transforming gradual progress into exponential acceleration. The next chapter reveals how to engineer these threshold moments, ensuring your compound curves don't just grow steadily, but explode into market dominance when the conditions align perfectly. Chapter 5, Breakthrough Thresholds. The rocket exploded on the launch pad. Again, SpaceX's third consecutive failure sent shockwaves through the aerospace industry. Critics called Elon Musk delusional. Investors questioned his sanity. The media wrote obituaries for his space dreams. But Musk wasn't panicking. He was calculating. Each failure taught lessons that strengthened the foundation. Each explosion revealed weaknesses that could be fixed. Each setback brought them closer to a threshold that would change everything. 6 months later, Falcon 1 reached orbit. The fourth launch didn't just succeed, it triggered an avalanche. NASA contracts poured in, commercial clients lined up, talent flocked to join the mission. What looked like overnight transformation was actually threshold engineering in action. This chapter reveals how to identify and deliberately engineer your own breakthrough moments. You'll learn to calculate the exact point where accumulated effort ignites exponential acceleration, and how to position yourself to catch the wave when it breaks. But first, you need to understand why most people miss their moment entirely. The moment that changes everything. Breakthrough thresholds aren't random events, they're mathematical inevitabilities disguised as luck. When capacity, credibility, and channel fit cross a critical line, the latency dividend releases. Small inputs suddenly generate massive outputs. Effort transforms into effortless momentum. The tragedy is that most entrepreneurs miss their threshold entirely. They're not ready when opportunity knocks. They lack the systems to handle sudden demand. They break under the pressure they've been working years to create. Others recognize the moment but can't capitalize. Their infrastructure buckles. Their quality slips. Their reputation suffers. They turn breakthrough into breakdown because they confused getting there with staying there. The winners engineer their thresholds deliberately. They define the exact signals that indicate readiness. They build systems that can absorb sudden acceleration. They prepare for success before success arrives. This isn't about working harder. It's about working with mathematical precision toward a calculable inflection point. The physics of business momentum. Every business operates under gravitational forces that keep it trapped in early-stage orbit. Customer acquisition costs are high. Revenue is inconsistent. Growth requires constant energy input. You're burning fuel just to maintain altitude. Exit velocity is the minimum consistent throughput needed to escape this gravity well. Below this threshold, you're stuck in expensive loops. Above it, momentum becomes self-sustaining. Growth compounds instead of consuming resources. The Beatles understood this intuitively. They spent years playing 8-hour sets in Hamburg clubs, developing their catalog and performance discipline. When Ed Sullivan called, they weren't just ready, they were over-prepared. Their threshold moment launched them into permanent orbit around global consciousness. Most bands would have broken under that pressure. The Beatles had built the capacity to absorb it. They had hundreds of songs ready. They had performance systems that scaled. They had the discipline to manage sudden fame without losing their creative edge. The difference between breakthrough and breakdown is preparation depth. When your moment arrives, you either have the infrastructure to handle it or you don't. There's no middle ground. The signal detection system. Breakthrough thresholds announce themselves through leading indicators that most people ignore. These signals appear weeks or months before the inflection becomes obvious in lagging metrics. Critical mass threshold signals vary by domain, but the pattern is consistent. Repeat purchase rates cross 20%. Referral mix hits 30%. Demo requests sustain above 10 per week. Word-of-mouth mentions accelerate. Quality scores stabilize above target thresholds. These aren't vanity metrics. They're tripwires that indicate fundamental shifts in market dynamics. When multiple signals align, you're approaching the threshold where accumulated micro-wins ignite rapid acceleration. The key is distinguishing signal from seasonal noise. Holiday spikes don't indicate threshold crossing. Viral moments don't guarantee sustained momentum. You need rolling 8-week averages that show consistent elevation above baseline performance. Most entrepreneurs either ignore these signals entirely or misread temporary fluctuations as permanent shifts. They scale too early based on noise or too late based on fear. Threshold engineering requires mathematical precision, not emotional interpretation. The readiness infrastructure. Inflection readiness isn't about predicting when your threshold will arrive. It's about being prepared whenever it does. This means building systems that can absorb sudden demand without breaking quality or overwhelming your team. Your surge kit contains the operational infrastructure needed to handle rapid acceleration. Intake triage SOPs that route requests efficiently, escalation matrices that prevent bottlenecks, communication templates that maintain quality at volume, capacity buffer calendars that protect recovery time. Quality gates become critical during surges. When volume spikes, defect rates typically follow. You need automated checks that catch problems before they reach customers. You need rollback plans that can quickly reverse problematic changes. You need spot check protocols that verify quality at random intervals. The goal isn't perfection, it's controlled scaling. You want to capture the momentum without breaking the systems that created it. This requires deliberate over-engineering of your operational capacity. SpaceX learned this lesson through painful experience. Their early successes were followed by quality issues that nearly destroyed their reputation. They had to rebuild their manufacturing processes to handle increased demand while maintaining their exacting standards. The two-stage launch strategy. The most dangerous approach to threshold crossing is the Big Bang launch. You announce everything at once, hoping to capture maximum attention. When it works, it's spectacular. When it fails, it's catastrophic. Two-stage launches reduce risk while preserving upside. Your soft open test systems with limited exposure. You identify bottlenecks, fix quality issues, and refine processes with a forgiving audience. Your full-scale launch then leverages proven systems with confident execution. This approach also creates anticipation momentum. Your soft open generates early testimonials and case studies. Your full launch benefits from social proof and refined messaging. You're not just launching a product, you're launching a movement. The Beatles used this strategy instinctively. Their Hamburg years were their soft open, developing their sound with audiences that cared more about energy than perfection. Their Ed Sullivan appearance was their full launch, polished performance for maximum impact. The threshold engineering process. Engineering breakthrough thresholds requires systematic preparation across 3 dimensions: signal detection, capacity building, and momentum channeling. Your threshold map defines the specific leading indicators that predict inflection points in your domain. You choose 3 metrics that causally drive your desired outcomes. You set quantitative tripwire values based on industry benchmarks and your own historical data. You document the exact sequence of actions triggered when thresholds are crossed. Your surge rehearsals prepare your team for rapid acceleration. Monthly fire drills simulate high-demand scenarios with time-boxed constraints. You test your triage systems, verify your escalation protocols, and identify weak points before they matter. You debrief every simulation and update your SOPs based on learnings. Your momentum channeling systems ensure that breakthrough energy gets directed towards sustainable growth rather than chaotic expansion. You maintain stop lists that cut low ROI activities during surges. You pre-record FAQ responses and onboarding materials that scale without human intervention. You establish clear priorities that guide decision-making under pressure. The compound threshold effect. The most successful businesses don't cross one threshold, they cross multiple thresholds in sequence, with each breakthrough enabling the next. This creates compound momentum that becomes increasingly difficult for competitors to match. Netflix crossed their first threshold when DVD by mail reached critical mass. This generated the cash flow and customer data needed to cross their second threshold, streaming viability. Streaming success provided the resources and audience needed to cross their third threshold, original content production. Each threshold crossing increased their defensive moat while opening new growth vectors. Competitors could copy individual tactics, but couldn't replicate the compound advantage of multiple threshold crossings. This is why threshold engineering becomes more valuable over time. Your first breakthrough teaches you the mechanics of threshold detection and crossing. Your second breakthrough refines your timing and preparation. Your third breakthrough develops institutional capability that becomes nearly impossible to replicate. The preparation paradox. Here's the counterintuitive truth about breakthrough thresholds. The more prepared you are, the more effortless they appear to outside observers. Your overnight success looks easy because your preparation was invisible. This creates a dangerous trap for entrepreneurs who study successful companies. They see the breakthrough moment, but miss the years of preparation that made it possible. They try to replicate the visible tactics while ignoring the invisible infrastructure. The Beatles' Ed Sullivan performance looked effortless because they had played those songs thousands of times. SpaceX's orbital success looked inevitable because they had systematically eliminated every failure mode. Netflix's streaming dominance looked obvious because they had spent years building the technical and content capabilities needed to execute. The preparation paradox explains why most attempts to copy successful strategies fail. Observers see the threshold crossing, but not the threshold engineering. They replicate the moment without building the foundation. The threshold multiplier effect. When you successfully engineer and cross a breakthrough threshold, the benefits compound beyond your immediate business metrics. Your reputation lifts, attracting better partners and opportunities. Your pricing power increases as you move from commodity to category leader. Your talent acquisition improves as top performers want to join winning teams. These secondary effects often prove more valuable than the primary breakthrough. The threshold crossing validates your approach and creates momentum that extends far beyond the original success metrics. But threshold crossing is just the beginning. The real challenge comes in the aftermath. Channeling breakthrough momentum into sustainable advantage without breaking the systems that created the breakthrough in the first place. The next chapter reveals the hidden art of momentum mastery and why most successful companies destroy themselves in the moment of their greatest triumph. Chapter 6, Endurance Edge. The entrepreneur sat in her car outside the investor meeting, hands shaking, another rejection, the 15th this month. Her savings were nearly gone. Her family was losing faith. Her competitors were gaining ground. She had two choices: quit and cut her losses, or persist through what felt like an endless winter. Sarah Blakely chose persistence. For 2 years, she faced rejection after rejection, trying to get her pantyhose idea manufactured. Department stores wouldn't meet with her. Manufacturers hung up on her calls. Friends suggested she get realistic about her chances. But Blakely had discovered something her competitors hadn't. Endurance isn't just about lasting longer, it's about lasting smarter. While others burned out from unsustainable effort, she built systems that made persistence automatic. While they relied on motivation, she engineered momentum. Today, Spanx is worth over $1 billion. Blakely's overnight success took a decade of disciplined endurance that most people would have abandoned in month 3. This chapter reveals how to build your own endurance edge, the systematic approach to outlasting everyone else in your market. You'll learn why endurance isn't a personality trait, but a designed capability, and how to convert willpower into structure that works even when you don't feel like it. The quitter's tax. The market is ruthless with quitters. Every early exit resets your compounding to zero. All the relationships you've built, systems you've created, and reputation you've earned vanishes the moment you walk away. But the real cost isn't what you lose, it's what you never gain. The opportunities that would have appeared in month 4, the breakthrough that was scheduled for week 18, the referral that was forming in someone's mind just as you gave up. Restart energy taxes every future attempt. Each time you abandon a strategy, you damage your own confidence. Each pivot erodes your team's trust. Each reset teaches your brain that quitting is an option, making it easier to quit next time. The math is unforgiving. 73% of entrepreneurs who quit their first major initiative never attempt another one. They don't fail because they lack talent. They fail because they lack endurance systems. Meanwhile, the survivors collect orphaned opportunities. When competitors quit, their customers need alternatives. Their partnerships become available. Their market share gets redistributed. The patient few inherit what the impatient many abandon. Thomas Edison understood this dynamic perfectly. While other inventors gave up after dozens of failed experiments, Edison systematically tested thousands of variations. His methodical logs reduced error rates and guided iteration. His disciplined endurance converted into durable breakthroughs that defined entire industries. Edison didn't have more talent than his competitors. He had better endurance systems. The architecture of persistence. Most people think endurance is about having more willpower. They're wrong. Willpower is finite. Systems are infinite. The persistence budget formalizes your capacity across 3 dimensions: time, cash, and emotional energy. Like any budget, it prevents overspending in one area while ensuring adequate reserves for the long game. Your time budget protects the hours that matter most. You defend your core work blocks fiercely, treating them as non-negotiable appointments with your future self. You automate routine decisions to preserve cognitive energy for high-leverage choices. Your cash budget creates runway for 90-day experiments without risking survival. You separate bet money from life money, ensuring that setbacks don't become catastrophes. You plan for the lag between effort and income, building buffers that let you persist through silent phases. Your emotional budget is the most overlooked but most critical component. You script responses for low-signal weeks when doubt creeps in. You design rituals that refill your energy reserves. You create support systems that provide encouragement without requiring constant explanation. This isn't about grinding harder, it's about grinding smarter. You're building infrastructure that makes persistence automatic rather than heroic. The feedback fasting protocol. Your brain craves immediate feedback, like an addict craves their next fix. This creates a dangerous cycle. Check metrics, feel disappointed, lose motivation, check again hoping for different results. Feedback. Fasting breaks this cycle by designing no-check windows that reduce anxiety and protect momentum. You establish specific times for metric review and ignore them completely outside those windows. Weekly input-only reviews keep you anchored to controllables. Every Monday, you assess your leading indicators, the activities you control completely. Did you hit your content targets? Complete your outreach goals? Ship your planned assets? This review builds confidence through consistency, regardless of outcome fluctuations. Monthly lag reviews provide signal without noise. Once per month, you examine your lagging indicators for trends, not daily movements. You're looking for directional shifts over 30-day windows, not Tuesday to Wednesday variations. The key insight: more frequent checking doesn't improve control, it destroys it. When you check outcomes daily, you're optimizing for noise instead of signal. When you check inputs weekly and outcomes monthly, you're optimizing for the variables that actually matter. Recovery rituals become essential during fasting periods. You need activities that refill your energy without requiring external validation. Physical movement, creative pursuits, or skill development that provides immediate feedback while your business metrics remain silent. The patience arbitrage opportunity. While others chase immediate gratification, you can capture value they abandon too early. This creates patience arbitrage, systematic opportunities to acquire assets, attention, and market position at discounted prices. Markets others abandon too early often represent timing mismatches rather than fundamental flaws. The idea was right, but the execution was premature. The technology was sound, but the adoption curve was longer than expected. The strategy was valid, but the lag was misunderstood. When you re-enter these markets with better timing and deeper roots, you inherit years of market education without paying the education costs. Previous players have trained customers, validated demand, and identified key success factors. You benefit from their learning while avoiding their impatience. Content platforms follow this pattern repeatedly. Early adopters build audiences on new platforms, then abandon them when growth slows. Patient creators who persist through the trough of disillusionment often capture disproportionate value when the platform matures. The same dynamic applies to business strategies, market segments, and partnership opportunities. What looks like failure to the impatient often represents preparation for the patient. The identity shift strategy. Sustainable endurance requires an identity shift from someone trying to succeed to someone who succeeds by outlasting. This isn't positive thinking, it's behavioral programming that makes persistence automatic. Identity-anchored habits create consistency that transcends motivation. I am the person who ships daily at 7 a.m. becomes more powerful than I should try to ship more content. The first statement defines who you are. The second suggests what you might do. You pair each habit with a fixed trigger and simple reward. The trigger eliminates decision fatigue. The reward reinforces the behavior loop. The identity anchor makes the habit feel inevitable rather than optional. Pre-deciding the minimum viable version for hard days prevents perfectionism from breaking your streak. On difficult days, you don't skip the habit, you do the smallest possible version. 1 sentence instead of 1 page, 1 email instead of 10, 1 minute instead of 1 hour. This maintains the identity while accommodating human variability. You're not trying to be superhuman, you're trying to be consistent. The environmental engineering approach. Your environment shapes your endurance more than your willpower. Small friction points compound into major obstacles. Small advantages compound into major momentum. Remove friction wherever possible. Delete apps that distract during work blocks. Clear physical clutter that creates mental noise. Eliminate conflicting commitments that force difficult choices. Create a dedicated work zone with visible cues that trigger focus. The same location, same setup, same ritual. Your brain learns to associate this environment with productive work, making it easier to start and harder to stop. Automate start sequences to eliminate activation energy. Calendar blocks that appear automatically. Timers that start without thinking. Templates that reduce blank page syndrome. The goal is to make starting feel inevitable rather than effortful. Track streaks visibly to create momentum psychology. A visible chain of successful days becomes something you want to protect. Breaking the chain feels like losing something valuable, not just missing an arbitrary target. The compound endurance effect. Endurance creates advantages that compound over time. Your first month of persistence builds habits. Your second month builds confidence. Your third month builds reputation. Your sixth month builds opportunities. Your first year builds inevitability. The attrition advantage accelerates as competitors drop out. Each quarter, more players abandon your market. Each year, fewer serious competitors remain. Your relative position improves, not because you're getting dramatically better, but because everyone else is getting tired. This creates a mathematical inevitability. More attempts multiplied by consistent learning equals eventual success. The formula is simple, but the execution requires systems that most people never build. Your endurance systems also improve over time. Your first persistence challenge teaches you the basics of habit formation and motivation management. Your second challenge refines your approach. Your third challenge creates mastery. Eventually, endurance becomes your competitive moat. Competitors can copy your tactics, but they can't replicate your persistence infrastructure. They can match your current capabilities, but they can't match your staying power. The endurance paradox. Here's the counterintuitive truth about endurance. The more systematically you build it, the less effort it requires. Your first month of persistence feels like pushing a boulder uphill. Your sixth month feels like maintaining momentum. Your second year feels like riding a wave. This happens because endurance systems create their own momentum. Habits reduce decision fatigue. Streaks create psychological investment. Identity shifts make persistence feel natural rather than forced. The endurance paradox explains why successful people often seem to work less while achieving more. They're not working less. They're working with systems that make effort feel effortless. But endurance without direction is just expensive persistence. The next chapter reveals how to build measurement systems that ensure your persistence is pointed toward the right targets, and how to adjust course without abandoning the journey when early signals suggest a better path forward. Chapter 7. Measure Right. The entrepreneur stared at his dashboard in confusion. 47 metrics blinked back at him in a rainbow of colors: website traffic, social media engagement, email open rates, conversion funnels, customer satisfaction scores, revenue per user, churn rates, lifetime value calculations. He had data on everything and insight into nothing. "Which number should I focus on?" he asked his advisor. "The wrong question," came the reply. "The right question is, which decisions are you trying to make?" Warren Buffett built a $100 billion fortune by ignoring most metrics entirely. While other investors obsessed over daily stock movements, quarterly earnings, and market sentiment, Buffett focused on three simple indicators: the quality of the business, the competence of management, and the price relative to intrinsic value. His measurement system was deliberately minimal. His decision-making was deliberately patient. His results were deliberately extraordinary. This chapter reveals how to build your own precision measurement system, one that connects today's actions to tomorrow's outcomes without drowning you in data. You'll learn why measuring everything means optimizing nothing, and how the right 5 metrics can guide better decisions than 50 wrong ones. The tyranny of the dashboard. What you measure rules you. This isn't metaphorical, it's mathematical. Your brain optimizes for whatever gets tracked, regardless of whether those metrics actually matter for your success. Bad metrics drive bad behavior with ruthless efficiency. Track social media followers, and you'll optimize for vanity over value. Track daily revenue, and you'll make short-term decisions that destroy long-term potential. Track website traffic, and you'll chase clicks instead of customers. The modern entrepreneur drowns in measurement options. Analytics platforms offer hundreds of metrics. Social media tools track dozens of engagement variables. Email systems monitor every possible interaction. CRM systems capture infinite customer data points. This abundance creates a dangerous illusion. More data equals better decisions. In reality, more data often equals more confusion. When everything is measured, nothing is prioritized. When all metrics matter, no metrics matter. Outcome obsession causes panic pivots that destroy momentum. You check revenue on Tuesday and panic when it's flat. You examine traffic on Wednesday and pivot when it dips. You review conversions on Thursday and abandon your strategy when they fluctuate. Each reactive change resets your compounding. Each pivot erases your progress. Each measurement-driven panic destroys the very consistency that creates results. The signal separation system. The solution isn't more measurement, it's better measurement. You need a system that separates signal from noise, cause from correlation, and control from chaos. Your measurement architecture rests on a simple foundation: 5 metrics maximum, 3 leading indicators you control completely, 2 lagging indicators that truly matter for your business model. Nothing else gets tracked. Nothing else gets optimized. Leading indicators are your controllables, activities that respond immediately to your effort and predict future outcomes reliably. Content pieces published, outreach conversations initiated, product demos delivered, framework iterations completed. These metrics move when you move them. Lagging indicators are your outcomes, results that arrive on delay and reflect the cumulative impact of your leading indicators. Revenue generated, customers acquired, rankings achieved, referrals received. These metrics move when your leading indicators have done their work. The key insight: you optimize leading indicators and monitor lagging indicators. You control inputs and observe outputs. You manage causes and measure effects. This separation prevents the attribution errors that destroy most measurement systems. When outcomes lag, your brain wants to credit recent actions rather than consistent systems. When results fluctuate, Your emotions want to change everything rather than trust the process. The decision journal revolution. Memory lies about causation. When your business surges, you'll credit whatever you did most recently, not what you did most consistently. When results disappoint, you'll blame your current strategy, not your inconsistent execution. Decision journal linkage solves this attribution problem by capturing your thinking in real time before results bias your recollection. You log each significant choice with its context, the decision, your hypothesis, your expected leading indicator movement, and your review date. This creates a feedback loop that improves over time. After 30 or 90 days, you score each decision based on its actual impact. High-scoring decisions get repeated and refined. Low-scoring decisions get archived and avoided. The journal becomes your memory prosthetic, preserving the causal chains that success tends to erase. When your content strategy finally generates leads, you can trace the breakthrough back to specific decisions made months earlier. When your outreach approach starts converting, you can identify which variables actually mattered. Warren Buffett has maintained decision journals for over 50 years. Every investment decision gets documented with his reasoning, assumptions, and expected outcomes. This discipline has taught him to recognize patterns across decades, building compound wisdom that most investors never develop. The journal also prevents confirmation bias by forcing you to define falsifiable predictions. Instead of vague hopes like "this should work," you commit to specific outcomes like "this should increase demo requests by 20% within 60 days." Clear predictions enable clear learning. The rhythm of insight. Measurement without cadence is just data collection. The magic happens when you establish review rhythms that match the natural lag patterns of your business. Weekly input reviews keep you anchored to controllables. Every Monday, you examine your leading indicators from the previous week. Did you hit your content targets? Complete your outreach goals? Ship your planned assets? This review builds confidence through consistency, regardless of outcome fluctuations. The weekly review focuses exclusively on inputs you control. No revenue checking, no traffic analysis, no conversion optimization, just a simple assessment. Did you do what you said you'd do? This prevents outcome anxiety from contaminating input execution. Monthly lag assessments provide signal without noise. Once per month, you examine your lagging indicators for trends over 30-day windows. You're looking for directional movement, not daily fluctuations. Rolling averages smooth out random variations and reveal underlying patterns. The monthly review asks different questions. Are your inputs translating into outputs? Are your leading indicators predicting your lagging results? Are your assumptions proving accurate or requiring adjustment? Quarterly strategy synthesis connects learning to action. Every 90 days, you review your decision journal, analyze your metric trends, and consider strategic adjustments. This is where you might change course, but only after sufficient data and deliberate analysis. The quarterly review operates at the highest level. Is your overall strategy working? Are your measurement systems capturing the right signals? Are your assumptions about lag timing proving accurate? The precision dashboard. Your dashboard becomes your command center, a single view that guides daily decisions without overwhelming cognitive capacity. The design principles are ruthless simplicity and actionable clarity. Name your metrics as verbs, not nouns. Ship 3 frameworks instead of frameworks completed. Complete 10 demos instead of demo count. This subtle shift reinforces your control over inputs while acknowledging the delay in outputs. Set success bands rather than point targets. Leading indicators get tight bands. You should hit these ranges 80% of weeks. Lagging indicators get wide bands. You're looking for trends, not precision. This prevents perfectionism from paralyzing progress. Color code your metrics by state. Green for on track, yellow for attention needed, red for intervention required. This creates visual clarity that enables quick assessment without detailed analysis. Hide vanity metrics on a separate tab or eliminate them entirely. If a metric doesn't directly inform a decision you need to make, it doesn't belong on your dashboard. Visibility equals attention, and attention equals optimization energy. Use rolling 30-day averages for lagging indicators to smooth out noise. Daily fluctuations are random, weekly patterns are often seasonal, monthly trends reveal signal. This smoothing prevents overreaction to normal variance. The attribution accuracy system. Time-shifted attribution corrects the memory errors that destroy learning. When breakthrough moments arrive, you need systems that connect results to their actual causes, not their apparent triggers. Your decision journal provides the foundation by capturing context when decisions are made. But attribution requires additional discipline. You must resist the urge to credit recent actions for delayed results. When your content strategy finally generates qualified leads, the breakthrough likely connects to content published months ago, not yesterday's post. When your outreach approach starts converting, the success probably traces to relationship-building activities from previous quarters, not this week's emails. The journal enables this analysis by preserving the timeline between decisions and outcomes. You can map today's results to yesterday's choices, building pattern recognition that improves future decisions. This accuracy becomes crucial for scaling success. If you misattribute a breakthrough to the wrong variables, you'll optimize for tactics that don't actually work. If you correctly identify the causal factors, you can systematically repeat and amplify them. The measurement trap avoidance. Even good measurement systems can become counterproductive if you fall into common traps that destroy their effectiveness. Metric overload remains the biggest danger. If you're tracking more than 5 metrics, you're tracking nothing effectively. The solution is ruthless prioritization. Identify the 3 inputs that most directly drive your desired outcomes and the 2 outputs that most accurately reflect your business health. Gaming your leading indicators corrupts the system by optimizing for quantity over quality. If you're hitting your content targets by publishing low-value pieces, you're fooling yourself. Add quality gates to your metrics, useful content pieces instead of any content pieces. Confirmation bias makes you see patterns that don't exist and ignore signals that contradict your preferences. Combat this by pre-committing to falsifiable thresholds and inviting outside challenges to your assumptions. Overfitting to noise makes you react to random fluctuations as if they were meaningful signals. Use medians and ranges instead of point estimates. Extend your review windows when dealing with high-variance metrics. Tool confusion wastes energy on measurement mechanics instead of measurement insights. Keep your system simple. One spreadsheet, one view, essential metrics only. Complexity kills consistency. The compound learning effect. Correct measurement creates compound learning that improves over time. Your first measurement cycle teaches you the basics of your business model. Your second cycle refines your understanding of lag timing. Your third cycle develops pattern recognition that enables prediction. This learning compounds into strategic advantage. While competitors make decisions based on intuition or incomplete data, you make decisions based on documented patterns and validated assumptions. While they repeat mistakes, you systematically eliminate error sources. The measurement system also builds confidence through clarity. When you can connect your actions to your results, uncertainty decreases and conviction increases. When you can predict outcomes based on inputs, anxiety transforms into anticipation. Eventually, measurement becomes invisible, a background system that guides decisions without consuming attention. You develop intuition about when metrics matter and when they don't. You sense patterns before they appear in the data. But measurement alone isn't enough. The ultimate test comes when your systems detect the breakthrough moment, and you need to channel that momentum without destroying what created it. The next chapter reveals the hidden art of scaling success and why most breakthrough moments become breakdown moments for those who aren't prepared to handle what they've worked so hard to achieve. Chapter 8: Momentum Mastery. The entrepreneur's phone wouldn't stop buzzing. 3 months ago, she was begging for customers. Now she had a waitlist of 200 prospects, partnership requests flooding her inbox. and media outlets wanting interviews. Her breakthrough had finally arrived. The latency dividend was paying out in spectacular fashion. By month 4, everything was falling apart. Quality slipped as she rushed to meet demand. Her team burned out from 16-hour days. Customer complaints spiked. Her carefully built reputation began cracking under the pressure of success she wasn't prepared to handle. She had spent years learning to create momentum. No one had taught her how to master it. Taylor Swift faced this same challenge on a global scale. After years of building her foundation, songwriting, performing, audience development, she hit breakthrough after breakthrough. Each album release created massive momentum that could have easily spiraled into chaos. Instead, Swift built systems that channeled momentum into sustainable dominance. Focused scope, quality control, strategic reinvestment. She scaled the vital few while saying no to everything else. This chapter reveals how to harvest your latency dividend without destroying what created it. You'll learn why momentum is both your greatest opportunity and your greatest threat, and how to build guardrails that preserve quality while capturing growth. The success paradox. Momentum creates a cruel paradox. The very success you've worked years to achieve can destroy the systems that created it. When demand surges, your first instinct is to say yes to everything. When opportunities multiply, your natural response is to chase them all. This instinct kills more breakthrough businesses than failure ever could. Quality slips erase years of trust in weeks. The reputation you spent months building evaporates when you can't deliver on promises. The word of mouth that drove your growth reverses into warnings that stop it cold. Team burnout derails delivery when you need it most. Your best people quit just as success arrives. Your systems break under stress they were never designed to handle. Your culture fractures when pressure exceeds preparation. Technical and process debt explodes under load. The shortcuts you took during lean times become catastrophic failures during busy times. The "we'll fix it later" decisions come due all at once, demanding payment you can't afford. NVIDIA faced this challenge when AI demand exploded in 2023. Decades of positioning in graphics processing suddenly became the foundation for artificial intelligence computing. Demand for their chips skyrocketed beyond any forecast. But NVIDIA didn't break under the pressure. Jensen Huang had spent years building capacity and partnerships that could absorb sudden acceleration. Their guardrails preserved quality amid blistering demand. Their focused scope prevented them from chasing every opportunity. The result, they didn't just ride the AI wave, they defined it. The channeling strategy. Momentum mastery isn't about working harder during surges, it's about working smarter before they arrive. You need systems that channel acceleration through predetermined pathways, preventing chaos while capturing growth. The first 30 days post-breakthrough focus on stabilization. You're not trying to grow faster, you're trying to maintain quality while handling increased volume. You triage demand based on predetermined criteria. You protect the rituals and processes that created the breakthrough. You resist the temptation to change everything just because everything is changing. Quality stabilization becomes your obsession. You add spot checks to catch problems before they reach customers. You slow down lower ROI channels to preserve capacity for high-value work. You enforce rollback triggers that can quickly reverse problematic changes. The protection of core rituals prevents effort amnesia from destroying what works. Success makes you forget the grinding months that made it possible. You start believing your own overnight success story. You abandon the boring fundamentals that created your breakthrough. Days 31 through 60 shift focus to capacity building. You add systems and people, but carefully. You standardize onboarding to reduce failure modes. You cross-train team members to prevent single points of failure. You prune distractions that seemed harmless during slow periods but become dangerous during busy ones. The key insight: you scale processes before you scale people. Hiring your way out of problems without fixing the underlying systems just creates bigger problems with higher payroll costs. Days 61 through 90 focus on reinvestment and preparation. You pay down the technical debt accumulated during the surge. You harden processes that proved fragile under pressure. You plan the next curve while optimizing the current one. The guardrail architecture. Momentum without guardrails becomes momentum without direction. You need structural safeguards that prevent success from becoming self-destruction. Capacity slack targets create breathing room that prevents system overload. You maintain 20 to 30% buffer capacity across all critical functions. This seems wasteful during normal periods, but becomes essential during surge periods. The slack absorbs variability and prevents cascading failures. Quality gates create automatic stops when standards slip below acceptable thresholds. If customer satisfaction drops below 85%, you pause new customer acquisition. If delivery times exceed promised windows, you stop taking new orders. If defect rates rise above 2%, you halt production until problems are fixed. These gates feel restrictive, but they preserve the reputation that drives long-term growth. Short-term revenue sacrificed for quality protection pays compound dividends over time. The stop list becomes your most powerful tool for maintaining focus. You pre-decide what you won't do during surges, no matter how attractive the opportunities appear. New product features, additional service lines, partnership requests, speaking engagements, media interviews. The stop list isn't permanent, it's protective. During momentum periods, your job is to execute what's working, not explore what might work. Exploration resumes after stabilization. The focused reinvestment formula. When momentum generates excess resources, the temptation is to spread investments across multiple opportunities. This dilutes impact and creates management complexity that can stall progress. The focused reinvestment formula allocates resources with mathematical precision: 70% to proven winners, 20% to essential maintainers, 10% to experimental tests. Your proven winners are the channels, processes, and activities that directly drove your breakthrough. These get the majority of new investment because they have the highest probability of generating additional returns. You double down on what's working before exploring what might work. Essential maintainers are the foundational activities that don't directly generate growth but prevent decay. System maintenance, team development, process documentation, quality assurance. These investments don't create momentum, but they preserve it. Experimental tests are small bets on potential future opportunities. You allocate limited resources to explore adjacent possibilities without compromising core operations. Most experiments fail, but the few that succeed can become your next breakthrough. The key discipline: kill underperformers quickly. If an investment isn't generating expected returns within predetermined timeframes, you cut it immediately. This preserves resources for opportunities that actually work. The Swift Standard. Taylor Swift exemplifies momentum mastery at global scale. Her career demonstrates how to channel breakthrough success into sustainable dominance through focused scope and quality control. Swift's Eras strategy shows how to stack momentum across multiple curves. Each album cycle builds on previous success while exploring new creative territory. She doesn't abandon what works, she evolves it systematically. Her touring systems demonstrate how to scale quality at massive volume. Every show delivers consistent excellence, despite logistical complexity that would break most operations. Her team has systematized everything from stage design to fan engagement, creating repeatable magic. Swift's reinvestment strategy focuses on owning her creative assets and controlling her distribution channels. She doesn't chase every opportunity, she builds infrastructure that compounds over time. Her business model creates more value with each success cycle. Most importantly, Swift protects her creative process during momentum periods. She maintains the songwriting discipline that created her success, even when external pressures push towards shortcuts and compromises. The Amnesia Prevention System. Success creates selective memory that destroys future success. When your breakthrough arrives, you'll forget the grinding months that made it possible. You'll credit recent actions rather than consistent systems. You'll abandon boring fundamentals for exciting innovations. Effort amnesia makes you believe your own overnight success story. The pain of building fades, while the pleasure of results remains vivid. This creates dangerous overconfidence that leads to strategic mistakes. Reward salience makes recent wins feel more important than foundational work. The viral post gets more credit than the months of audience building that made it possible. The big client gets more attention than the systems that attracted them. The prevention system requires deliberate documentation and ritual protection. You maintain decision journals that capture the real timeline between inputs and outputs. You preserve the daily practices that created consistency. You resist the urge to optimize away the boring work that actually drives results. Weekly main thing reviews keep you anchored to core activities during momentum periods. What are the 3 activities that most directly drove your breakthrough? Are you still doing them consistently? Are you protecting the time and energy they require? This review prevents scope creep from destroying focus. When opportunities multiply, your attention fragments. When demands increase, your priorities blur. The main thing review forces clarity about what actually matters. The scaling paradox. The most counterintuitive aspect of momentum mastery is that sustainable scaling requires doing more of fewer things, not more of everything. This violates every instinct about growth and opportunity capture. When momentum arrives, you'll face pressure to expand in every direction. New products, new markets, new partnerships, new channels. The opportunities feel infinite, and the fear of missing out feels overwhelming. But expansion without foundation creates fragility that momentum can't overcome. Better to dominate one market than to struggle in 10. Better to perfect one product than to launch 10 mediocre ones. Better to excel at one channel than to dabble in 10. The scaling paradox resolves through sequential focus. Master one curve completely before starting the next. Build unassailable strength in your core before exploring adjacent possibilities. Create systems that can handle 10x growth in your primary market before pursuing secondary markets. This approach feels slower but proves faster. Deep strength in one area creates platform effects that accelerate expansion into related areas. Shallow presence across multiple areas creates vulnerability that competitors can exploit. The momentum multiplication effect. When momentum mastery becomes systematic, it creates multiplication effects that compound over time. Your first breakthrough teaches you the mechanics of momentum channeling. Your second breakthrough refines your systems. Your third breakthrough creates institutional capability. Eventually, you're not just riding momentum, you're creating it. Your actions influence market dynamics. Your decisions shape industry standards. Your success creates opportunities for others to follow. This transformation from momentum rider to momentum creator represents the ultimate mastery. You've moved beyond reacting to market forces to shaping them. You've evolved from player to platform. But momentum mastery is just one piece of a larger puzzle. The final chapter reveals how to integrate everything you've learned into a daily operating system that makes breakthrough success feel inevitable rather than accidental, and how to ensure that your next breakthrough builds on this one rather than replacing it. Chapter 9, Keep Rising. You now possess something most entrepreneurs never develop: the ability to see effort and results on different clocks. While others panic during silent phases, you build roots. While they chase immediate feedback, you trust delayed dividends. While they abandon strategies at the first plateau, you engineer breakthrough thresholds. This isn't just business knowledge, it's a new operating system for life. You've learned to read time correctly, channel momentum strategically, and outlast anyone through systematic endurance. The question now isn't whether you'll succeed, it's how many times you'll succeed and how much freedom each success will create. This final chapter compresses everything into a daily rhythm that makes breakthrough results feel inevitable. You'll leave with your first next step, a framework for life, and the quiet confidence that comes from understanding the mathematics of momentum. The Bamboo Blueprint compressed. The The bamboo effect rests on three foundational insights that separate winners from everyone else. Roots before shoots. You build quiet assets before seeking applause. Consistency beats intensity every time. Mechanism development precedes volume scaling. While others optimize for visibility, you optimize for viability. While they chase outcomes, you perfect inputs. This reversal of priorities feels counterintuitive, but proves mathematically superior. Deep roots create sustainable shoots. Shallow roots create temporary spikes that collapse under pressure. Measure what matters, ignore what doesn't. You track 3 leading indicators you control completely and 2 lagging indicators that truly matter. Clean dashboards prevent panic pivots. Decision journals reconnect causes to effects across time. Review cadences replace reactive changes with strategic adjustments. This measurement discipline transforms uncertainty into clarity. When you can connect your actions to your results, confidence replaces anxiety. When you can predict outcomes based on inputs, strategy replaces hope. Engineer and channel momentum. You define breakthrough thresholds before they arrive. You rehearse surge scenarios before they happen. You install guardrails that protect quality during acceleration. You reinvest in the vital few while pruning distractions. This preparation transforms breakthrough moments from lucky accidents into engineered inevitabilities. You don't just ride momentum, you create it, channel it, and compound it into lasting advantage. The freedom transformation. The bamboo effect creates 3 types of freedom that compound over time: operational freedom, emotional freedom, and strategic freedom. Operational freedom emerges as systems replace heroics. Your business runs without your constant intervention. Your team executes without your constant direction. Your revenue grows without your constant effort. You've built assets that work while you sleep. This freedom feels impossible when you're grinding through the root-building phase. Every task requires your attention. Every decision needs your input. Every problem demands your solution. But systematic asset creation gradually shifts this dynamic. Your frameworks become your team's playbooks. Your SOPs become their operating instructions. Your systems become their decision-making guides. What once required your presence now requires only your oversight. Emotional freedom emerges as predictability replaces volatility. Your mood stops swinging with daily metrics. Your confidence stops depending on external validation. Your identity stops fluctuating with temporary setbacks. This stability comes from understanding lag ratios and trusting your measurement systems. When you know that today's efforts will surface as results in 90 days, you stop checking outcomes every Tuesday. When you trust your leading indicators, you stop panicking over lagging fluctuations. Strategic freedom emerges as optionality expands. Better partners want to work with you. Better terms become available. Better deals flow your way. Your reputation opens doors that effort alone never could. This freedom accelerates over time. Your first success creates options for your second. Your second success creates platforms for your third. Eventually, you're not just choosing between good opportunities, you're creating opportunities for others. The relationship revolution. The bamboo effect transforms your relationships by replacing volatility with reliability. When your business operates on predictable rhythms, your personal life becomes more predictable too. Fewer broken promises build more trust. When you understand lag ratios, you make realistic commitments. When you track leading indicators, you spot problems before they become crises. When you maintain consistent systems, you deliver consistent results. Your family stops worrying about your latest pivot. Your team stops questioning your strategic direction. Your partners stop wondering if you'll follow through. Reliability becomes your signature, and reliability compounds into reputation. Communication improves as data replaces drama. Your updates become factual rather than emotional. Your reviews focus on trends rather than fluctuations. Your celebrations connect to real milestones rather than temporary spikes. This clarity reduces conflict and increases alignment. When everyone understands the lag between effort and results, patience becomes shared rather than individual. When everyone tracks the same leading indicators, focus becomes collective rather than scattered. Leadership matures as calm under pressure becomes your defining characteristic. You model patience during silent phases. You demonstrate standards during surge phases. You embody the long-term thinking that creates lasting success. People opt into your mission because they trust your process. They see the systems behind your success. They understand the thinking behind your decisions. They want to be part of something that feels inevitable rather than accidental. The compound achievement engine. With the bamboo effect operational, your achievement capacity transforms from linear to exponential. You don't just accomplish more, you accomplish more with less effort. You ship consistently even when nothing shows. Daily route work becomes automatic. Weekly leading indicators stay green. Early signals of durable scale appear months before they become obvious to competitors. You're building tomorrow's breakthrough while others are still reacting to yesterday's results. You survive plateaus and trigger inflections. Plateau puncture experiments produce systematic leaps rather than random spikes. Threshold tripwires activate precisely when conditions align. Surges get captured without chaos because your systems are pre-sized for acceleration. You scale without breaking. Guardrails protect quality during growth phases. Reinvestment compounds results rather than creating complexity. Team energy stays high because processes handle the stress instead of people. This capability creates a permanent competitive advantage. While others struggle with the basics of consistency and measurement, you're optimizing advanced systems for breakthrough engineering. While they're learning to survive plateaus, you're learning to trigger inflections. The effort reduction paradox. The most counterintuitive aspect of the bamboo effect is that mastery reduces effort while increasing results. Your first cycle requires maximum energy to establish habits and systems. Your 10th cycle runs on momentum with minimal intervention. Habits automate discipline, reducing activation energy for important activities. What once required willpower now requires only triggers. What once demanded motivation now demands only routine. Your highest leverage activities become as automatic as checking email. Knowledge compounds into pattern recognition that accelerates decision-making. You spot opportunities earlier. You identify problems faster. You make cleaner choices with less analysis. Experience becomes your competitive moat. Systems scale gracefully, handling increased volume without increased complexity. Your processes absorb growth without breaking. Your team executes without constant guidance. Your business expands without expanding your stress. This creates the ultimate paradox. The more successful you become, the less effort success requires. Your early struggles create systems that make later success feel effortless. The Oprah Standard. Oprah Winfrey embodies the bamboo effect at the highest level. Her career demonstrates how patient route building creates platform-level influence that compounds across decades. Winfrey's early career was marked by setbacks and rejections that would have stopped most people. Fired from her first television job, told she was unfit for television news, demoted and humiliated by supervisors who didn't understand her potential. But Winfrey stayed the course. She built systems for audience connection that transcended traditional media formats. She developed frameworks for authentic communication that created unprecedented trust. She constructed a media network that amplified her influence across multiple channels. When breakthrough moments arrived, she was ready. Her talk show didn't just succeed, it redefined the medium. Her book club didn't just recommend titles, it moved markets. Her media company didn't just create content, it shaped culture. Each inflection point built on previous foundations. Her television success enabled her magazine launch. Her magazine success enabled her network launch. Her network success enabled her platform expansion. The compound effect accelerated over decades. Today, Winfrey operates with the quiet confidence that comes from understanding the mathematics of momentum. She doesn't chase opportunities. Opportunities seek her. She doesn't build audiences. Audiences build around her vision. She doesn't create influence. Influence flows from her systematic excellence. This is the bamboo effect at full maturity. Effort that feels effortless. influence that feels inevitable, and freedom that feels infinite. Your first next step. The journey begins with a single decision. Block 60 minutes tomorrow for root work. Choose one asset to build, a signature framework that captures your unique approach, a system that automates your highest leverage activity, a piece of evergreen content that compounds over time. Start simple, start small, start tomorrow. Define your minimum viable repetition. What's the smallest daily unit that maintains momentum? 30 lines of code, 1 page of writing, 1 framework component, 1 system improvement. Make it small enough that you can't fail, but meaningful enough that it matters. Start a decision log entry for that choice. Write down your hypothesis, why this asset matters, what leading indicators you'll track, when you'll review progress. This creates accountability to your future self and begins the attribution accuracy that prevents memory errors. This first step seems insignificant. It's not. It's the beginning of a compound curve that will define your next decade. Every expert was once a beginner. Every breakthrough started with a single action. Every empire began with a single brick. The rising continues. You now understand what most people never learn. Silence is not failure, it's root building. The quiet months aren't wasted time, they're capacity formation. The invisible work isn't meaningless effort, it's compound preparation. Patience turns into power through systematic accumulation. Power turns into freedom through strategic leverage. Freedom turns into impact through focused reinvestment. This cycle repeats at higher levels throughout your career. Your first breakthrough teaches you the mechanics. Your second breakthrough refines your timing. Your third breakthrough creates institutional capability. Your 10th breakthrough establishes platform influence. Each cycle builds on the previous one. Each success creates options for the next. Each breakthrough makes the next one more likely and more valuable. You are now equipped with the most powerful force in business, the ability to wait long enough to win. While others quit during silent phases, you persist through root building. While they panic during plateaus, you engineer breakthroughs. While they break during surges, you channel momentum. The bamboo spends years in silence, building roots that will support 90 feet of growth in 90 days. When the surge comes, it's not luck, it's mathematics, it's not magic, it's momentum, it's not accident, it's architecture. Your surge is coming, your roots are building, your time is approaching. Begin today, keep rising, the sky is waiting.